What is going on, fellas? Welcome back to Debit Credit Nation. We are going to talk about bonds tonight. Bonds? James Bond? Shane Bond? Or Bharat Bond? No, not that kind of bond. So by bond, I mean debt instrument. So when a company wants to raise money, it has two options. Number one, it can raise share. That means you become an owner of the company. So in this case, if the company earns more profit, the share price will rise. If the company's sales figure decreases from last quarter to this quarter, then the share price will fall. On the other hand, company can also issue bond or debenture. So this means the company is borrowing money. So if you subscribe to a bond, that means you are not the owner of the company. Instead, you become a lender in that company. So in that case, it doesn't matter whether company earns more profit or less profit, whether their sales figures rise or fall. The company has promised that it is going to pay you 9% interest for the next 5 years. That means the company will pay you 9% interest. So in that case, your bond value will never fall. For equity, it may rise or it may fall, but for bond, whatever interest rate they promise, they have to pay that. So for example, suppose a company says it is going to issue a 9% bond for the next 5 years. So what happens? Suppose you invest 1 lakh rupees in that bond. That means every year you are going to get 1 lakh into 9%, that is 9,000. So 9,000, 9,000, 9,000, 9,000, and in the last year you are going to get 1 lakh 9,000. 1 lakh being the principal value and 9,000 is the interest amount. So in this case, the company has to pay you 9,000 irrespective of company's performance. So if you don't want the risk of losing money by investing in share, the share will rise or the share will fall. Suppose tomorrow China attacks Taiwan, so again the share market will fall. That means whatever shares you are holding, their market value will fall and you are going to lose money. But whatever bonds you are holding, that will not fall and company still has to pay you 9% or the coupon rate of interest that the company has already promised. So this is the difference between equity share and bond. So now we are going to see how can you invest in bonds from the system. Let's go to the system. So traditionally, the corporates are issuing bonds of a very higher value, say minimum investment of 10 lakhs, 15 lakhs. So retail individual or retail investors cannot invest such a high amount in bonds. In shares, if you want to buy a share of TCS, say if I want to buy a share of TCS, how much do I have to spend? I can spend only 3,000. If I want to buy a share of Reliance, how much do you have to spend? I can spend only around 2,500 per share. Okay, so it is available at such low denomination, but in India the bonds were not available at such low denomination. So Wint Wealth is one website which has came up with this lower denomination value so that even us, the retail investors, can invest. So let me first show you how you can invest into bonds using the Wint Wealth website. After that, I'll tell you if you want to invest into bonds of higher denomination, where can you invest. So I am in the home page of Wint Wealth and see I have already invested around close to 90,000 and this is my overall return. I have just started last month, that's why the return amount is very low. So this is the home. You go to the asset and you will see what are the open assets available as of this time. So currently there are 6 assets available. 6 assets means there are 6 open bonds you can invest. For example, say this one, Incred, it is giving you 10% return. This one 5-star is giving you 8.5%. Muthoot Finance 8.25%. Proteum April 2023, it is giving you 10.25% return. Which FD can guarantee a return of 10.25%? Even the small finance banks are also not offering this huge amount. So these are the 6 live assets available here. Let's understand one by one. Incred is one of the company which is issuing 10% XIRR. It says that the interest repayment is going to happen quarterly. Principal repayment is going to happen at maturity, that means after 24 months, and minimum investment is only 9,000. Wint Wealth has created such lower denomination so that we retail investors can invest. Check this one. This one has minimum investment of 10,000. This one has 10,000, but this Proteum is offering 10.25%, but it has a minimum investment amount of 1 lakh. Let's see the other two. 1 lakh, 1 lakh. I have invested into Incred in February 23. So 68% are sold out. Still few bonds are still available. Let's see. If you click on view details, you'll get to know all the terms that this bond is offering. The first item, it says listed. It means that if you buy this bond and if you don't want to hold it till maturity, say you don't want to hold it for the next 24 months, you can still sell it in stock exchange. So I have invested this bond. Let me show you that this bond is available, is appearing in my Zerodha. So if I go to Zerodha and I go to holding, you see this Incred is available here. That means I bought it at 997 and currently it is trading at 991. That means it is trading at a 0.68% loss, but I don't intend to sell it right now. I am going to hold it till maturity and I am going to get the 10% return. So it is still available. So listed means you can still sell it in stock exchange, similar to your equity shares. Let's get back to the Wint Wealth website to see the other features. Next feature is called senior secured bond. Whatever bonds you will see in Wint Wealth, only senior secure bonds are available. So you just hover your cursor here, it will say what is a senior secure bond. So let me tell you in a nutshell. Senior secured bond means if the company ever gets liquidated, that means if the company ever gets closed, these bonds will be paid first, and because on this bond some of the assets are mortgaged. Okay, so the assets are hypothecated, so they are going to sell off the asset and they are going to pay our money back. All right, next 10%, and it is around 24 months of maturity left. Next it will tell you that you just need to click. So the minimum value is 9954, which is one unit into 10. You cannot buy less than 10 units. You can keep on adding, but you cannot reduce. This is your minimum investment. So if you invest the minimum amount, which is a 10 units, so you're investing 9954, you're going to get back 11,890. If you want to see the repayment timeline, just click on this repayment timeline. It will tell you that on 2nd of May it is going to pay the first interest. Okay, it is going to pay interest quarterly, 2nd May, then 2nd of August. Similarly, it is going to pay, and the principal and interest it is going to pay on 2/5/25. That means around 2 years later it is going to mature, and they are going to pay back the principal along with the interest. So this Incred is a non-banking financial company which is called NBFC. Details about the NBFC is given here. Who are the investors that have invested in this company given here. What are the profitabilities? See, their profitability has increased from around 7% till 16% within one financial year 22 to financial year 23. Then Wint Wealth team they list the bonds which meets certain criteria. So it has very less leverage. Leverage means the company has raised very less debt. So this is a bond, this is a debt. Company is going to borrow money. So if the company borrows more money, it will be having more leverage. It has less leverage means the company has borrowed less money. Next, what is the credit rating? So it has a credit rating of A+. What does the credit rating mean? So credit rating means whenever a company borrows money and it promises to pay back the money, then it has to fulfill the same. In the past, if the company has borrowed money, whether the company has paid on time, according to that, there are different institutes which issue credit rating. CRISIL is one of such institute. You must have heard about CARE as well, ICRA as well. They issues credit rating. These institutes rate different company and they give their rating. So A+ means stable, A++ means very good. If it is B+ or C+, that means in the past it has defaulted or it has a probability of defaulting their loan. So A+ means this company has borrowed money in the past and it has paid. Next, you are going to see if you are investing in bonds, there are certain risks involved. So Wint Wealth will call out those risks upfront. So what are the risks? It says that exposure to real estate. That means this company invests in real estate, and in real estate the return on investment is, the period is a bit longer. Next, limited vintage and few verticals, so it does not have too many type of product. Again, about this NBFC everything is mentioned. CRISIL A plus. What is the asset under management? It is available in 9 states and these many active customers are available. Okay, so all this information are available. So there are few risks not only towards this NBFC but for all bonds. So the general risk, you will see the first risk is called credit risk. Credit risk means if the NBFC becomes bankrupt, your money will be gone. But don't worry, it has a security, so complete investment recovery is not 100% guaranteed. Okay, this is one risk. Next risk is liquidity risk. That means if you want to sell your bond before the maturity, can you do so? Okay, so it says that although this is a listed asset, buyer in the market aren't always guaranteed. That means, as I have shown you that in Zerodha I can sell it, but I may not find a buyer for the bond. I can easily find a buyer for the share, but for bond there may not be buyers available. Next, fraud risk. The NBFC may show you inflated profit. That can be a risk. Okay, and these types of risks are mentioned here. What are the taxation rates available here? So it says that it is going to deduct 10% TDS. Okay, so this is all about the details of the bonds. So this is one kind of bond. Now if you don't want to invest in bond, there is one more option. If I go to assets, see there are two options. One is collateral backed bond, which are these in InCred and 5-star, and the second one is the sovereign gold bond. So I have invested in the sovereign gold bond, which is called SGB. I did the investment last week because it was Akshay Tritiya. What does SGB mean? So if I click on invest now, it will tell me about this SGB. Obviously I have to buy around this time. Generally SGBs are issued by the government. So currently the gold price per gram is 6,000. Now government is giving you a 4.44% discount, so you can buy it at 5,334 and it will be paid back to you on August 2028. That means around 5+ years from now. Now the benefit is every year you are going to get 2.5% per annum as interest. Very low compared to what I have just shown you, which was 10% here, versus this one is merely 2.5%. but the benefit is after 5 years the value of gold will rise and your maturity will happen at that rate. Okay, so what is the benefit of investing into gold versus digital gold or physical gold or gold ETF? Gold ETF is nothing but mutual funds. So if you want to buy physical gold, say in Dhanteras people buy gold coins, versus if you want to invest in sovereign gold bond, what are the difference? This one is backed by Government of India. That means they are going to pay you back. Next, it provides you additional 2.5% interest. Say you buy gold at 6,000 this year, 5 years later, say the gold price becomes 6,500. Okay, so for physical gold you buy at 6,000 and you sell at 6,500, you get a 500 profit. But here you are going to get another extra 2.5% interest every year in the 5 years. Next, do you need to pay any tax? No GST applicable. If you want to buy physical gold, you have to pay huge, say 3% GST you have to pay. Okay, next, no additional cost because there is no making charge. Here you see up to 25% making charge and storage cost. This you don't have to incur if you purchase SGB. Then is it tradable in exchange? Yes. I don't want to hold it till August 2028. Yes, I can exchange, I can sell it in stock exchange, but this one you cannot. Now say you want to invest in higher value bonds, you want to take more risk, then how can you do so? So currently you see only 6 assets are open in Wint Wealth, but you want to invest in higher value. How can you do that? So for that there is one more website. There are multiple websites. So in the other websites, let me tell you the best one, which is the fixed income. okay, the fixed income. You come here, so here I did not complete my KYC, I haven't invested anything, so it says it creates different buckets. If you want to invest in bond, then bank bond, PSU bond, these are all government bonds, then government guaranteed bond, NBFC bond, tax free bond, private bond, special purpose bond. If you want to invest in SGB, state government or central government. 54 EC bond, so this one reduces capital gain, it reduces your tax. Gold bond, bond public issue, RBI savings bond, corporate FDs, whatever bond you want to invest, you can see it here. The problem with this, the difference between Wint Wealth and this website is, this website doesn't have the minimum value of investment is on a higher side, so it is not a retail investor friendly website. And also it will not unlike Wint Wealth, it will not filter the bonds based on the senior security. Click on explore all bonds. Okay, so it will tell you what are the bonds which are open right now. So here you can sort based on yield. So if I do that, that means the highest yield bond will be shown here. What is the highest? 11.35. okay, Spandana's for something. So this is huge, 11.35, but again this is a private limited company. I don't trust private limited company, let's not invest in this one. Next one, 10.25%, clicks capital, again private. Yes Bank, private. 9.62%, Andhra Pradesh state beverage, it's a government company. You see, if you scroll down, you will see government guarantees, government guaranteed. Okay, the previous ones are private bank, NBFC. So government says that it is going to pay you 9.62% for next 8 years, but the problem is the minimum investment amount is 10 lakh. Who's going to invest 10 lakh for 8 years? If you have that mentality, if you have that mindset, you can go ahead. The government ensures that it is going to pay you 9.62%. Let's scroll down. See, 10.55%, Meghalaya Energy Corporation Limited, again government guarantees. Which mutual fund will give you 10.55% return for the next 10 years? You see how many years left till maturity? So it says around 10 years left since maturity, but here see the minimum investment is better than this Andhra Pradesh one, because it had 10 lakh. This one is only 2 lakh. So let's get inside and see what this bond is offering. So click on this view detail. Here it will say that state government guaranteed blah 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 high return bond. Now it says the coupon rate is 10.55%. So in my example, I told you an example of 9%, and this one is giving you 10.55%. It was issued on 3rd April 23. It will be matured on 3rd April 2033. Okay, that is almost 10 years from now. Remaining period. Tax free? No, you have to pay tax on this. Simple interest. Quarterly they are going to pay you interest. Maximum available quantity, so you have to invest the minimum value we saw 2 lakh into 50, that much you can invest. TDS, yes, 10% TDS will be deducted. Call option, put option, let's not talk about these derivatives right now. So basically call option is, if the call option is available, that means I can sell it before 2033. That is a call option. This is issued by state government, and this is again secured. That means if the company or government cannot pay you, they have to sell off their asset and they will finally pay you. Minimum investment is 2 lakh. So if you invest 2 lakh, that means your principal amount and accrued interest, this is going to be your accrued interest, and this is your yield, and settlement amount is 2,15,000. So you're investing 2 lakh, settlement amount is 2,15,735. okay. If you want to see the cash flow, you can see here. So today, once you invest on 12th June 2023, they are going to pay you an interest of 4,000 something. Again 11 September, so quarterly they are paying interest 5,000 something, 5,000 something, 5,000 like that, keep on paying you interest blah blah blah. 2031, on 2033 it is going to pay you the last interest and your principal amount. Okay, and this is the summation. So this is your principal amount, which anyways you are going to get back, and that summation of the interest are also 2,11,000. ultimately you will get 4,11,000. so you invest 2 lakh now and you will get 4,11,000. Okay, so it is doubling your money, and also it is holding your money for how long? For 10 years. So 9 year 11 month from now. So if you have the mentality or mindset to invest on a higher value, you can come to this website and you can click on place order. Obviously I cannot place it right now because I haven't completed my KYC. So similarly you can come back and you can look for SGB. So I want to see central government SGB, if anything is open now. See, these many SGBs are open. If you want to invest in corporate FDs, so right now no corporate FD is available. You want to invest in PSU, government guaranteed bond, PSU bond. PSU means public sector undertakings. Those are also government entities. Okay, so they are investing at much cheaper rate. So currently if you want to invest in FDs, even Bandhan Bank is providing 8% FD for general public and 8.5% for senior citizen. So you can select, you click on explore all bond and you click on based on yield. So based on that you can again select, see Andhra Pradesh, this has minimum 10 lakhs. So you just need to see whether it is government guaranteed and the minimum investment is within your risk appetite. Then you can go ahead and invest on this. See, this one is 11.45 for around 7 years, but the minimum investment is 10 lakh. I hope you have a pretty good idea about the bond investing. So I'm going to stop right here right now and we will connect again with other valuable information. Thank you so much.